Welcome to the Lend Academy podcast, episode number 223. This is your host, Peter Renton, founder of Lend Academy and co-founder of the Lend It Fintech Conference. Today's episode is sponsored by Lend It Fintech USA, the world's largest fintech event dedicated to lending and digital banking. It's happening on May 13th and 14th, 2020 at the Javits Center in New York. Lending and banking are converging, and Lend It Fintech immerses you in the most important trends of the day. Meet the people who matter, learn from the experts, and get business done. Lend It Fintech. Lending and banking connected. Go to lendit.com/USA to register. Today on the show, I am delighted to welcome Steve Hoke. He is the General Manager of Mortgage and Commercial Lending at Finastra. Now, Finastra has only been around a couple of years, but the companies that form Finastra have both been around for decades, or in the case of D&H, over a century. But Finastra is really supplying the banks with critical software to run their business. They have over 9,000 customers. I wanted to get Steve on the show to talk about the changes that are happening in both mortgage lending and in commercial lending. And we go into some detail about both of those, and we talk about what banks want, what the bank's customers want when it comes to a digital experience, when it comes to more efficiencies in this process. And Steve also looks into his crystal ball and tells us where this is all going, what kind of end game is going to happen in the mortgage lending and commercial lending space when it comes to digitization. It was a fascinating interview. I hope you enjoy the show. Welcome to the podcast, Steve.
Hey, thanks for having me. It's great to be here.
Okay, so I'd like to get this thing started by giving the listeners a little bit of background. You've had a pretty interesting career to date. If you could maybe touch on some of the highlights before Finastra.
So I've been in the financial services space for going on 20 plus years. I don't want to get too high in those numbers, but over 20 years of experience in financial services. I've done a lot in the last 15 years in and around the lending space in particular, working closely in the credit union space. And now with Finastra, I've been with Finastra for about 3 years, and I manage our mortgage and commercial lending businesses.
Mm-hmm. Okay. And so let's tell us a little bit about Finastra, because it's not a brand that has been around that long. I know there was a merger. I know you were with D&H, I believe, beforehand. So why don't you just tell us a little bit about how Finastra came to be?
Sure. So I've been with the company for a little over 3 years now, and about 6 months into my employment with D&H, we were a publicly traded company that was acquired by a private equity firm based in Texas called Vista Partners. Vista owned another company in their portfolio called Mysis, which was headquartered in London, and had very complementary products serving very complementary geographies, but not overlapping. So they primarily served European, Asian, African markets, and D&H was largely focused in on the North American market. So Vista saw an opportunity to put these two companies together and create a global brand around this company called Finastra. So we're about 10,000 employees, about $2 billion in revenue, and clients all over the world.
Okay. And so, what is the breadth of products that you guys offer?
We really, when you look at all the functions of a financial institution, a bank, credit union, we offer the full range of products. So in the North American markets, we have lending products, core banking, digital online banking assets. We do large syndicated commercial lending. We have treasury and capital management products, investment products, payment products. So really the full gambit of things that a financial services firm would need from a provider like Finastra.
Right. Okay. And so you're running the mortgage and commercial lending products. Just tell us a little bit about your domain specifically.
Yeah. So Finastra has a number of different lines of businesses inside it, typically centered around those product sets. But, somewhat uniquely in the North American market, we have a segment of our business that we call the North American Community Markets segment. So we're focused in on banks and credit unions to assets, typically around, call it 10, 20, 30 billion is kind of our sweet spot, 30 billion and below. And we serve those institutions with a number of products. So that could be a core banking system. Our flagship product there is Phoenix. We have, like I said earlier, a digital banking product, Malazai, that we acquired into the Finastra family a little over a year ago. So providing online banking tools for banks and credit unions that attach to the core banking solution. And then on the lending side, we have a full suite of lending products. So we have a point of sale solution called MortgageBot POS. So when you go to a bank or a credit union website and apply for a mortgage, that front end application is typically provided by a third party. We're proud to call 1,400 clients, customers of our MortgageBot point of sale platform. And that's been in market for 20 plus years. And then we also, behind that, have MortgageBot Loan Origination System, which is the LOS, the workflow tool that the financial institution uses to close and fund the mortgage. And then when you go across the different loan types, so consumer lending, we have the equivalent kinds of solutions, online loan application for a car loan, credit card, boat, and the consumer loan origination system behind that. We have a commercial loan origination system called Credit Quest. And then we, of course, wrap all that in our compliance products that we have in market. And the flagship there is Laser Pro, our compliant loan document solution.
Mm-hmm, mm-hmm. Okay, so then I want to actually dig into some depth into the the mortgage lending systems and the commercial lending side. But before I do that, maybe we could just step back for a second and just let us tell us your perspective on how lending is changing. Obviously, you see you've been in financial services for 2 decades. 2 decades ago, it was very different to what it is like today. And how much of what you're really focused on now is sort of a digital experience for the consumer, and how is that changing?
Yeah, I'll even step back just a little bit and talk about the overall digital journey for a financial institution. And it's evolved a lot over the last 15, 20 years. So, they rightfully started their journey with simple transactions that were high volume, repeatable. And so think about the digital banking experience. I want to log in, I want to see my checking or savings account, and I want to maybe transfer some money. Institutions have to do that all day long, and consumers were looking for digital tools to do that. So they opened up the digital banking environment to do that. And then they moved up to slightly more complicated transactions, but still high volume. And so we saw where they started on the lending side was consumer transactions, think credit cards. You get a lot of credit card transactions. Those are fairly straightforward types of loan transactions, and you do those at scale and you do those quickly. So we saw the next logical place was credit cards. Then consumer lending, and you get into car loans, still a high volume, a little more complicated, a little more work to process that loan type, but slowly that moved online as a digital experience. And now I think you're seeing, a broader embrace of mortgage. And then I think the really complicated still transaction where there's lower volume is that commercial loan transaction. So it's definitely been a journey, and I think they've approached it in a real logical way in terms of where can we have the most bang for our buck. Simple, straightforward, high volume transactions, and they've been moving through the suite of their solutions over time.
Mm-hmm. Okay. Yep. So let's talk about a complicated transaction is a residential mortgage. It's usually the biggest transaction anyone ever does in their lives, and it's been a few years since I've done one, but I've had friends who recently moved, and it was surprising to me to learn that their experience. I mean, sure, they're sending PDFs instead of having to do signatures, but they did have a closing document where they still had to sign this closing session. They had to sign their name 100 times. So it's still today towards the end of 2019, we're still at in a mortgage experience that it's evolving, but it still seems rooted in the 20th century as far as user experience goes. So why do you think it's been so slow to really fully move to a digital experience?
Well, as we talked about it's a complicated transaction, and it's complicated because you have so many different parties involved in a transaction. It's not just a straightforward transaction between a borrower and the financial institution. You have to include appraisal companies. You have to include mortgage service providers to get, MI or flood. And then you have closing companies and different interested parties, real estate agents. There are a lot of people involved, and so you have a lot of complexity in that regard. And then the data complexity as well is high on a mortgage transaction. I mean, think about all the information that you need to know about that borrower in order to comfortably make a good decision that's good for the financial institution and frankly, good for the borrower as well, to make sure that, hey, as a financial institution, I'm doing the responsible thing and getting the right kind of loan product for the borrower. And so I need the right kind of information in order to help them make a good decision and for the borrower to feel good about their transaction. So I think, at its root, it's a complicated transaction, but you look at it and you're right. You're leaning on old conventions to collect that data. And you see steps towards progress, though. So Fannie and Freddie's day one certainty solution, where if a borrower is able to electronically verify their employment history through services like the Work Number, they can easily collect that data and pass it along to Fannie or Freddie. And at that point, no further information is needed to validate the employment history. You don't need to submit the last 3 W-2s. And so there are pieces of that puzzle that are becoming more straightforward and easier to collect that data about a borrower so that you don't have the burden of scanning and uploading all those electronic documents. But because of all the parties involved and all the data requirements that each one has in that constituent process, it's going to take time to chip away and continue to find those little pockets of efficiency that you can add into the transaction.
Right. So you think, are we still in the first inning when it comes to, if it's a 9-inning game here, for the end point being a complete digital process for the majority of borrowers? What inning are we in?
Yeah, I would say we're certainly, in the first couple of innings. I might go a little further than the first inning. I might say the second or top of the third. It's getting better, but there's still a lot of, there's complexity and there's comfort too. The borrower has to be comfortable sharing information in different ways as well. And so one of the ways that you can collect income and asset information about a borrower is for them to give you their logins and passwords to their bank accounts or accounts that they hold at other institutions during the application process. And so a borrower is sitting there staring at a screen saying, do I trust this institution enough, and are they going to be able to be responsible with my login and password to go scrape the information out and complete this profile of my assets that I have that I'm applying towards this loan? And so part of it is complexity and part of it is just comfort and people getting more comfortable with digital tools.
Mm-hmm. Sure. That makes sense. And so obviously that's going with today's generation, that's, becoming primary home buyers over the next decade. We're going to see a lot more comfort from that end, I would expect. So what is Finastra's, do you have a digital end-to-end solution that you can provide to community banks and what have you, and credit unions, or what exactly is your offering?
Yeah, so I kind of touched on the overall tool set that we offer at the top. So we have our online application, and that seems a fairly, you think of that as a fairly straightforward thing. Oh, I just fill out a form and I submit it. But there's still a lot inside that application. So we have things like I talked about, the ability to do the day one certainty pieces with the income and asset verification. So we can collect that information up front and no further documentation is required. Inside our point of sale solution, we can also offer the 3-day disclosures. And so when somebody fills out an application, selects the products and things like that, they can see all the information and get the disclosures supporting of that so that it doesn't have to go back to the financial institution for review and then approval and then sending out disclosures. The system can automatically generate those upfront disclosures that are necessary. And then we also have the loan origination system behind the scenes. So all that data that's collected is integrated into the loan origination system. So it all passes. If a credit report is pulled during the point of sale process, the complete credit report is passed over to the LOS. Any documents or images that might be uploaded by the borrower as part of the transaction, so those W-2s and the tax forms, if those things are still being required, those things can all be automatically transmitted and indexed in the loan origination system so that the processor can quickly see that those are there and note that those conditions have been satisfied. And we also have the ability to do the document packages on the back end through partners like DocMagic. And DocMagic even extends further into the e-close space with some of their capabilities. So there's a lot that we provide in-house, and where we go beyond, we have partners who we rely on to help kind of fill some of those gaps. So we can take it where where different municipalities allow things like e-notaries. We can enable e-notaries to get, the signing event completed for a mortgage. So there is a lot that we can do with the digital mortgage experience just from the products and solutions and integrations that we have at Finastra.
Right. Okay. And so then, and when you're talking with your customers, what are they actually? What are they really asking for that you don't have right now? Like, what are the, is it more digital user experience? Is it faster processing? A more flexible origination? I mean, what are the things that the banks out there really want today?
Yeah, so with the Great Recession and the fallout from that, there was obviously a lot of course correction on the regulatory environment. And so there was a point where institutions were extremely focused on making sure the process was compliant. That was their first concern. And we've done a great job, I think, at Finastra delivering on our commitment to compliance and delivering compliance solutions. And I think our clients have started to internalize the compliance requirements in today's environment. And now they're turning to what is a very tight margin environment on their loans. So what they're lending at and what they're making on these particular loans, the margins are very tight. And so they're looking for efficiency in the process. Mm-hmm. Where can they squeeze out, automate a step in the process so that they can continue to drive down the time to funding, reduce the number of days in the cycle, and drive out people having to handle data or documents or information and letting the system automate those steps. So we're working closely with clients to talk about how can we drive efficiency in the process, what kinds of things can we do to, have those integrations to be able to enable some of those digital processes, or how can we automate the workflow to make that process as straightforward as possible for the maximum number of situations that they might encounter.
Mm-hmm, mm-hmm. Okay, so then how? I mean, I'm assuming you keep up to date with all the fintech players in this space. I mean, we've had people from had the CEOs of Blend and Better. We haven't had Roostify yet, but we will. So those sort of companies. These are obviously these are focused just on the typically the residential mortgage market for providing for banks to help make it more efficient. How do you view those companies? How do you see them as competitors? I mean, obviously you're a much bigger organization than any of those companies I've mentioned, but I'd just be curious to see what your take is on those new players.
Yeah, I think for a lot of entrants in the market, the point of sale experience is the easier place to start. You can build a solution and scale it. And I think, Blend, Roostify, others have good product. Where we're focused is on that vertical integration with the point of sale solution and the loan origination system. Those providers, no disrespect to them, they do what they do well, but they rely on the LOS and a number of different integration solutions in order to make happen what they deliver. We're very, we can integrate the point of sale solution with other LOSs, but I think where we offer the best experience, most compelling experience is where we're vertically integrated between the POS and the LOS together, where we can really make sure, the data flows as seamlessly as possible, that, things around status notifications, satisfying conditions on the loan, that kind of thing, we do really well, and that we're controlling kind of the full stack of the experience. Right. And so things like the 3-day disclosures at the end of the application, we're able to do that because of the data that we have in both systems, and that for us is a competitive advantage.
Okay, so then where do you think, as you look at your product roadmap, and I don't know how far you go out, but I'm wondering, where are we going here? Do you think that in 10 years' time, people buying a home, it'll be all done on a mobile phone, it'll be very, very fast? Do you think there'll still be some kind of blend of maybe mobile with maybe even a physical branch visit or a video conference call, that sort of thing? Where do you see this market going?
Yeah, I think that when you 10 years out is sure tricky to project out, year over year. You see all these kind of incremental year over year improvements, and all of a sudden 10 years later, you look backward and you're like, wow, the world is really different.
Yep.
I think from a consumer borrower perspective, I think that the ability to leverage different sources of data to streamline the application process is going to change a lot. So we're, like I said earlier, we're just starting to see some of that, but really creative uses and sources of data to simplify the application process so that you can take something that may be a 10, 15-minute activity down to, less than a minute activity to say, I want to apply for a mortgage, and the system just knows where to go because it knows enough about who you are to go grab that data and complete the application or submit the data on your behalf. Certainly on the processing side of it, I think there's going to be a lot of drive to apply artificial intelligence, machine learning rules to try and drive scenarios and performance and efficiency through the process. So if they know that these conditions have happened, 100,000 other times, and they see it again, the system knows how to automate certain steps and make certain requests of other systems for information, and that you try and drive efficiency through the process. So I think automating business rules and logic-driven kind of decisions are going to be really central to the processing of a mortgage to simplify the experience and drive down that cycle time as fast as possible. And lastly, I think, those third-party sources that I talked about, something like an appraisal could change dramatically over the next 10 years in terms of how you value a home, and are there sources of data and information that exist that don't require somebody to go out and physically appraise the property, because you can tap into other data sources in order to do that. So I think there's a lot of disruption that could happen over the next 10 years in the process.
Right. Okay. Sure. Makes sense. So I want to switch gears to commercial lending, because I know this is your other area, and it's an area that I find fascinating. Obviously there's some overlap. I mean, there's process-wise, a lot of times a commercial loan has collateral, often a physical property in the backing the loan, but it's another area that is it's complicated. It's been slow to move to digital, but there seems to be progress being made. So maybe why don't you just give us the lay of the land in commercial lending today when it comes to applying digital user experience to it?
Yeah, I would say, if you used your baseball analogy, I would definitely say we're in the, we may have just started the first inning on commercial lending. It's so critical to so many community banks and credit unions in our market that we serve. There are so many community banks who are built on commercial lending, relationship-based lending with the entities out in their local markets. And those are long, entrenched, established relationships. And migrating those things online and changing those relationships to be electronic relationships has been a slow-moving process. So there are tools that enable a commercial entity to go apply online. It's a basic loan request, and you can attach documents that might support it. But there's still so much due diligence and unpacking of entity information, things like that. And it's still fairly complicated for a brand new commercial relationship to be a completely digital one because of the complexity of those loans. From a back office processing, you still have, your classic credit committees and people doing the credit memos and the underwriting process. And, there is so much that makes each loan unique and the financial circumstances of that it's harder to automate the processing of those loans because, the information varies from borrower to borrower so dramatically, and the type of loan product that might be presented varies, and the risk associated with those things. It's a really different beast than something like a mortgage.
Sure. That makes sense. So then when you're like your customers, the community banks and some of the larger banks, I mean, are you really focused on sort of what I would call the middle market, these sort of, say $500,000 to $50 million loans? Is that sort of the core? Or are you really, does your systems also help them with, doing small business loans? What's sort of the range?
Yeah, it's a really, there is that continuum from the individual who's applying and using their personal credit as the leverage for that particular loan. And then you have those where you have multi-party entities, and which system and where they go for those kind of things does get a little gray sometimes. Sometimes financial institutions want to do some of those smaller individual proprietor loans on their consumer system. Sometimes they end on the commercial system. But when you're talking about true commercial lending, as you described it, that middle market kind of thing, that's where our product Credit Quest is really well tuned, is kind of those multi-party entity kind of commercial loan relationships. Certainly we can do the smaller ones, but it really goes down to the institutional preference of, do they view that as a consumer loan that happens to be funding a business transaction, or do they want to kind of treat that as a commercial loan, even at the smallest level? So it really, there's a lot of variation how our financial institution clients approach those types of loans.
Right. I'll ask sort of a similar question to I asked about the mortgage lending is, what do your bank customers want here? Is it, because I imagine there's, every loan is so bespoke in some ways because every business it looks very different. Is it really more, is it a data gathering? Is it loan origination kind of, what do they really want today to help them improve the efficiency of this process?
Yeah, I think it does come down to the borrower interaction. And so having good online tools to be able to apply for a loan and then be able to share the financial data with the financial institution. So being able to extract data out of an accounting system, pass that information to the FI and be able to load that then into their commercial loan origination system and just make that process easier. And, even, the covenants associated with the loan, once that's on the books, annually, they may be required to share that information. So how do they gather that information kind of quickly, seamlessly, and as painlessly as possible for the borrowers to complete that request? So it's really around, I think, the borrower experience that our clients are telling us that's where they're looking for us to provide solutions.
Right. Okay, fair enough. So one thing I want to switch gears a little bit, and one thing that I was listening to a podcast that you were being interviewed a few months ago, where you were talking about the importance of maintaining a physical presence. And we've just been talking about digital this entire interview so far. And you were making the argument that physical presence is still so important. So maybe given that we know we're all moving towards a more digital world, what's the argument then for your customers, maintaining the banks maintaining a physical presence in their communities?
Well, I often talk about this because people so often look at quote unquote traditional businesses, whether that's, a traditional retailer or, a traditional financial institution. And they talk about, the age of digital and the march of digital and everything is going online. But I think it's often underreported the view that digital is also going more traditional. And my example I like to use is Warby Parker. Warby Parker is started as an online glasses retailer. You go to their website, you order 5 pairs of frames, they send them to your house, you try them on, you pick the frames you like, you send it back, and some number of days later they send you a pair of glasses, and it's done. And that sounds great, right? But Warby Parker has realized that I think they've reached a certain amount of organic volume online, and if they want to continue to scale and grow, they've got to get out into the communities where people are shopping and offering those solutions to people, in a traditional retail environment. And so I was just talking about this when I was down in Chicago a few weeks ago, and within a 7-mile radius, there were like 4 or 5 Warby Parker glasses retail stores. And so there's this convention or this belief that everything is going to go digital and that retail is entirely doomed. And I don't buy into that narrative that everything is completely digital experience. I think there has to be a good balance between both. People are always going to want that convenience of being able to go somewhere and get a great service experience. And that's why I don't think that it'll always be at the scale, and the answer for a financial institution to grow is always open another branch. They can be more strategic about where they have branches, but I think branches and a physical presence are a great asset to serve a local community, to have the relationships, and to be able to provide a great experience that represents the brand of that financial institution. I think that it's conceivable Quicken Loans or others, could open up Rocket Mortgage stores just because I think it's a way for them to continue to try and get share of those transactions outside of the online environment. So it wouldn't surprise me to see a non-traditional financial institution have a physical presence somewhere in the next 5 or 10 years because they need the scale. Right.
Yeah, fair enough. So conversely, I mean, you spend most of your day talking about digital tools, I imagine, and you've talked, you said the banks and their commercial lending, they want a better digital experience. Same with the consumers in the mortgage space. So when there isn't this physical, face-to-face, transaction or face-to-face interactions to close a deal or whatever, when it's purely digital, then what do you say to your customers about how they can really maybe not mimic, but certainly move, towards a more personal, less kind of purely digital experience when you're operating just in the digital environment?
Yeah, I mean, a digital transaction, even if you never talk to someone or never experience that institution, it's still a manifestation and representation of what that brand and that institution is all about. I took out a small car loan recently with my daughter, and it was an entirely digital transaction from kind of beginning to end, but it still made me have an association, affiliation, and a fondness for the institution that I was borrowing from. That's where I have my checking savings account, and it was a great experience being able to do those things digitally, and it made me feel like, hey, this institution has figured out this part of the process and gave me confidence in them as an institution. So something that seems as inhuman created a more human feeling about the institution because of the positive digital experience I had.
Right. Okay. So we're almost out of time, but before I let you go, one last question. I think you've been in this business for a while now, and you talked about it's hard to sort of think about what happens in 10 years' time, or look at how far we've gone in the last 10 years. But when do you think it'll be 100% digital experience? I mean, with potentially with maybe an option to have some kind of physical kind of interaction, but when any kind of transaction, whether it's a complicated commercial transaction or applying for a mortgage, when do you think that's going to be 100% digital?
I don't know that it ever will be. And, part of it, especially when you talk about something like a mortgage, and you said it at the top, it's a scary transaction because it's probably the largest financial transaction many people will make in their lives, right? Mm-hmm. And, we've seen data and studies that show that repeat home buyers, or people who have purchased a home multiple times, want fast digital experiences. People who are first-time home buyers, at our time, that happens to be millennials now, still want to have the comfort of being able to talk to someone, understand it. And I think there's always space for that kind of conversation to be not a digital one. I believe as much of it that can be done digitally will be done digitally. So I'm not trying to advocate that everybody should go and open a Blockbuster store, right? I think that a lot of things are going to be digital, but I just think that the ability to have a human interaction, to get that comfort on this transaction, or to ask a benign question and just know that you've gotten an answer that you feel good about, always leaves a little space for a non-digital experience. But certainly, the pain of getting the data and exchanging the data and the nuts and bolts of the transaction as quickly as we can get there, that's what consumers want. Right.
Well, you make some very good points there, Steve. I think it really is interesting. It's going to be interesting to see how it plays out. But as you say, it's not so much a first-time home buyer is going to want to have, they want someone to talk to. Whereas someone who's doing it for the fourth time just says, just let me get this over with. And that makes sense. Okay. Anyway, I really appreciate you coming on the show today, Steve. Thanks a lot.
Thank you. It's been my pleasure.
Okay. See ya.
Bye-bye.
I think Steve makes a very good point there towards the end, where he talks about that some people, even people who spend their entire day on their phones and they're used to digital experience in pretty much everything, if they're going to buy their first house and take a loan out that's several times larger than their annual income, they're going to be a little bit tentative about that, and they're going to want someone often to hold their hand. Whereas maybe someone who's done it 3 or 4 times will be satisfied with a 100% digital experience from start to finish, make it as efficient and quick as possible. So you've got, there clearly is room for this, non-digital, or maybe it's just a more sort of interactive experience when it comes to taking out a mortgage and even taking out a large commercial loan for that matter. So it's not all just about how can we digitize, how can we make this a better digital experience. It's about looking at the overall experience, what the customer wants, and how to deliver on exactly that. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was sponsored by Lendit Fintech USA, the world's largest fintech event dedicated to lending and digital banking. It's happening on May 13th and 14th, 2020 at the Javits Center in New York. Lending and banking are converging, and Lendit Fintech immerses you in the most important trends of the day. Meet the people who matter, learn from the experts, and get business done. Lendit Fintech, lending and banking connected. Go to lendit.com/USA to register.